Tesla has just stunned Wall Street with another set of record numbers. Today we'll be diving into the electric vehicle industry. Make sure you stay until the end because we'll be unpacking Elon Musk's statement, which has implications for the lithium stocks and the broader lithium market as well. Where do we start with Tesla? Once again, they've defied the odds. Another record quarter. They beat on both the top and the bottom line, but it was the manner in which they did it. And some of the insights that they provided with their earnings, which we'll unpack in this video, that really attracted a lot of attention. As we know, Tesla gives some insights before their earnings report with their production and delivery numbers. These are a bit of a leading indicator, providing an insight about the potential trajectory of where they're heading. We know for the recent numbers, Tesla showed us that they had 310,000 deliveries. This was, of course, a record. It gave a bit of an indication about where things might be heading. But here, Tesla's numbers absolutely blew every expectation out of the park. Top and bottom line beats, as we mentioned. When we're having a look at some of the numbers here, revenue, $18 billion. Tesla continues to grow year on year. But what was really fascinating was looking at the automotive revenue. Automotive revenue was $16.86 billion and it grew by 87% year on year. Not only was this outstanding in isolation, but when you pair it compared to the current backdrop and setting that many of the other automotive manufacturers are trying to navigate through, we know the macroeconomic landscape has been a difficult one. A lot of the other companies have seen a regression in terms of sales. They're navigating through the supply chain shortages. Of course, a lot of the virus implications that still flow through, but Tesla was able to do 87% year on year. Granted, the regulatory credits made up $679 million worth of this automotive revenue. Of course, this component is high margin, but we can't take away any of the outstanding numbers that we saw from Tesla. It's worth noting that this flowed through to the bottom line as well. Free cash flow after CapEx was $2.2 billion in Q1. And interestingly, the number that really attracted a lot of attention from Wall Street. We know that Tesla have been focusing on expanding margins. And there's of course been a lot of discussion from Elon Musk that over time they'll be able to continue to expand this. But bearing in mind that Tesla is an automotive company, they have margins in the automotive sector of 32.9% for this quarter. When you compare it to any of their other peers in the automotive industry, this is unparalleled, and this really did attract a lot of attention. When we're isolating the revenue growth, really two major components there. Increased deliveries, of course, which we saw come through with the 310,000 deliveries, but an increase in sales price as well. We did a video looking into the Tesla story a couple of weeks ago and mentioned and discussed the fact that Tesla have been raising prices fairly consistently over this past period, and this earnings report, as well as upcoming earnings reports, would be the time we started to see how these increased sales prices flowed through and how it affected demand, and we got that indication here. It's worth noting as well that yes, Tesla managed to continue growing that top line, but despite the inflationary pressures that are affecting everyone around the market, Tesla also managed to reduce their cost per vehicle, which is quite outstanding when you think about the macroeconomic landscape that we're currently in. And so as we've made mention of, this has been a difficult period for not just the automotive industry, but so many industries around the world. We're still navigating with, of course, the supply chain disruptions, lockdowns in different regions. We know about the inflationary pressures and rising input costs. But as you can see here, Tesla provided some insight with their recent report. With the report, they stated that challenges around the supply chain have remained persistent. And of course, they've highlighted the virus outbreaks, particularly when thinking about Tesla's Shanghai factory, which underwent a temporary shutdown. They've got a limited production restart, but they're still navigating this. And they have mentioned, of course, the prices of some raw materials have increased multiple fold. If you've been following the channel for a while, you know we've been talking about lithium as well as the broader EV battery material space. And many of these underlying commodity prices have been soaring, and Tesla have referenced this here as well. They've also mentioned that the inflationary impact on the cost structure has contributed to adjustments in the product pricing, and we did see that start to flow through with the rising unit cost as well for each vehicle that they did sell. And so having a think about where Tesla's currently positioned, Giga Berlin and Giga Texas both came online over this past period, as we've mentioned. Tesla have mentioned that they want to continue building out their supply chain, focusing on in-house cell production, raw material procurement, as well as supplier diversification too. Interestingly, Elon Musk once again made reference to a robotaxi. He mentioned a vehicle with no steering wheel and pedals would potentially be ready for volume production by as soon as 2024, which is always something to keep an eye on. We know that Elon Musk is mercurial. He's always got a lot of different irons in the fire there. But what was really, really strong and what was reaffirmed with this earnings update that a lot of analysts and investors really paid attention to was, yes, they reaffirmed their 50% average annual growth on a multi-year horizon, which in itself is stellar. But Elon Musk actually said there was a reasonable potential outside chance of a 60% growth, which is It's fairly outstanding, and we got more of an indication. We know that Elon Musk has stated previously, it's not a demand issue. The demand's there. We know that the wait lists for Teslas are there and they continue to grow, but they've stated that some of the factories have been running below capacity because their concern is surrounding the supply chain. We know that if there was ever going to be an earnings report where excuses would have been acceptable, we see so many of the other peers in the automotive sector talking about disrupted supply chains, inflation, rising cost pressures. This would have been the time. But yet Elon Musk actually said there's a potential that we outscale our guidance of 50%, potentially even see 60%. It really just speaks to the bullishness and the confidence that he has in the broader Tesla operation. And of course, now that speaks to where the broader sector tailwinds are going as well. As we mentioned, Tesla on track for potentially 1.5 million vehicles for the year. However, as we can see here from this visual, it's not just Tesla anymore. The electric vehicle industry is growing and growing rapidly. There is significant investment coming through from Volkswagen to Ford, Stellantis, Mercedes, and many of the other manufacturers. Industry investment is coming through. And what's fascinating as well is when we look at some of the numbers here for the broader EV industry. EV registrations almost doubled in 2021, and we can see that it's starting to have that exponential growth curve coming through. It'll be fascinating to see what the next few years have. But with the industry investment coming through, it's likely that the demand is only going to continue to grow. In terms of registrations, if we have a bit of a back of a napkin math that around about 80 million new cars sold in 2021, 6 million-ish EVs were sold, that still puts us at under 10% penetration. And of course, it depends on now the assumptions and the forecasts that you're going to be plugging into your models. But do we think 20, 30, 40, 50% of new cars sold by 2030 will be electric vehicles? And then what proportion of those will be Teslas and what proportion will be made up of the rest of the industry? Regardless of how the composition ends up playing out, and of course a lot of investors and analysts will be watching this eagerly because it's going to be a fascinating contest to watch. The underlying component of it all is that raw materials will be needed to help to facilitate this electric vehicle adoption that we're starting to see play out. And all of that then flows through to Elon Musk's quote here. He stated during the earnings call that he encourages entrepreneurs out there who are looking for opportunities to get into the lithium business. And this builds on Elon Musk's previous discussions. We know that he mentioned that due to the insane prices of lithium, that Tesla may be considering getting into the upstream, whether it's on the mining or the refining side. Elon stated that lithium margins right now are practically software margins. It's difficult to argue against it when you look at the rapid uplift in terms of the lithium prices. LCE 70, 80,000 per ton, which is absolutely phenomenal when you consider where it was just a couple of years ago. He actually pleaded, and this was quite an exuberant thing to plead, but it shows the desperation and the demand for the raw materials. He stated, "Can more people please get into the lithium business?" And then he pleaded, "Do you like minting money? If so, the lithium business is for you." Of course, the supply and demand dynamic is going to be fascinating. We know that as prices continue to rise upwards, of course, there will be a supply response that comes online. Eventually, we'll reach an equilibrium. It's going to be fascinating to see where that equilibrium level lands. However, for now, it seems like supply can't come online fast enough. And we can evidently see that demand for the raw materials as the electric vehicle transition picks up pace is only going to continue to grow. It's going to be fascinating to see where it plays out. If you're interested in the sector, we've looked into a range of different videos for the space. Here's another one you can check out. Drop in a comment, let us know your thoughts. A big thank you for joining us, and for now, stay well and happy investing.